Hello, I'm Rachel Jones for the Finance News Network. Joining me today from Russell Investments Australian Responsible Investment ETF is Portfolio Manager James Harwood. James, welcome back.
Thanks, Rachel. Good to be back.
First up, could we start with an introduction to the ETF?
RARI, which is the ticker of the ETF on the ASX, it was launched around 3 years ago. It provides investors with a broad range of exposure to Australian shares that all score highly on a widely accepted range of environmental, social and governance principles. Now, historically, ESG has been quite niche, and it's also meant a high cost point. And when we launched this ETF, it was very clear from clients and advisors that they really wanted an ESG fund, but at a much lower cost point.
Now to the ETF in more detail. What can you tell me about the composition?
One unique aspect of RARI is the Responsible Investment Committee. This committee meets twice a year, and they take the starting 250 stocks that makes up the FTSE Russell Australia Index, and then they apply the ESG screen. We then apply two positive tilts. The first is another ESG screen, but here we're using ESG scoring from a company called Sustainalytics, and we're taking overweight positions to companies that score highly on ESG scoring from Sustainalytics. Finally, a third positive tilt is applied, and that's around yield. We know that a lot of investors in the ETF are low tax investors. They value franking credits, and consequently we want to take a positive tilt to stocks that pay above average yield.
And what can you tell me about the performance?
The purposes of the design of the product was for performance to be quite similar to a benchmark like the ASX 200. Many ESG funds in the past have taken quite large bets just on ESG principles and really not addressed the risk aspect of some of those bets. RARI has a return stream that's much more like the ASX 200, and that was really intentional in how we designed the product.
Are there any other points you'd like to add?
Yeah, so I mentioned that cost was an important factor, and the cost of the RARI ETF is 45 basis points per annum, and that compares really favourably to a managed fund, an ESG managed fund. In addition, just like all of our other ETFs, investors can have complete transparency. They can pull their holdings on a daily basis off our website, and that's another positive comparison to a managed fund.
So what impact does excluding stocks have on the portfolio compared to the broader market?
The exclusions from the Responsible Investment Committee, they amount to around 17% of the ASX 200. So RARI is an ETF that's taken material positions based on E, S and G grounds, and that's definitely not the case for some ESG funds. Another really important aspect that despite this 17% of exclusions, we're able to deliver a fund that has index returns or returns quite similar to an index like the ASX 200 over a longer period. And we know that some of the earlier ESG funds often took quite large bets and took a lot of large risks to broad benchmarks. And a lot of investors, they want to have the ESG aspects of a fund, but they really aren't willing to accept big kind of performance variations to an index like the ASX 200, and that's why we think the composition of the RARI ETF, it meets a lot of objectives of potential investors.
Historically, responsible investing has been quite niche. What is the interest in this area today, and how has that changed?
Responsible investing is definitely becoming more mainstream. We're speaking to a number of advisor groups that are really developing quite large books of ESG-related business, and that's really encouraging, and has led to a lot of competition in these kind of products now. That's good for investors. I mentioned that RARI has a management fee of 45 basis points, and that's much lower than a lot of managed funds in this space. And essentially, as it becomes more mainstream, the amount of options available to invest within ESG is just going to increase for potential investors.
Last question, James. What can investors expect if they invest in the ETF?
RARI provides investors with exposure to a broad range of companies that all score highly on environmental, social and governance grounds. Now, that's not the case for many Australian equity funds, where their ESG policy really just focuses on the governance aspect. In addition, RARI provides these ESG qualities at a very attractive cost point of 45 basis points. And it also provides investors with a yield that's around 5%. That's about 0.5% above the market and well above cash rates.
James Harwood, thanks for the update.
Thank you, Rachel.